Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. So, talking about the markets yesterday, it was totally unexpected that the market would rally so much. In fact, I had told you that my view was that the market would actually consolidate, but then it actually went up. So, let me tell you something very important here. When you're new in the stock market, you might see there are so many people in the market. On YouTube itself, there are so many people, right? So there are so many people in the market who are actually talking their views about the market. Now, like yesterday, I had told that I'm expecting consolidation in the market, whereas maybe many others would have told up market, up move. Somebody would have told down move. Now, who is correct? Let me tell you something. On a short term, on a very short term, nobody can actually predict the market. It is just analysis that we have. All of us have our own analysis, and based on those analysis, we take a view on the market. And the market has its own identity, so it would actually do as it wants, not the way I want or somebody else wants. So what happens is, it is like if our view on the market is correct and we take a trade along with the view, and if the market goes as per the view, then we make money. The day the market goes against our view, that is the day we say something called as a stop loss. So you take the stop loss, come out of the market. If the market is against you, simple, come out of that. This is something I'm talking about trading. But if you're talking about investing, you don't have to do all this, because only thing you need to do is check if the company is good, stay invested, and if not today, someday it will rise for sure. There are many examples that I can quote from my own investing experience. For example, ITC was one of those stocks which actually tested my patience. I had the stock holding for almost 2 years, until when it started moving, and after entire 2 years, the stock moved up so much that it gave exponential returns than what it would have done if it had moved in an average mode in the last 2 years. So that is one of the example. So I'm telling you this, there are several such examples. As long as you know the fundamentals of the company is correct, just stay invested in the stock. It goes down or up, doesn't matter. In fact, if you look at HDFC Bank, another example, of late it has been on long consolidation for some time. So will it rise? It will, but when is it going to happen? I don't know. Last week, of course, it has risen slightly, but it still has not touched its 52-week high. In fact, it has been expecting for so long that HDFC Bank will hit a 52-week high, but it's not happened. But does it mean it's on a wrong track? Definitely not. As long as companies' fundamentals are strong, you can just stay invested. One day, you will get return for even the years or months that it has not performed all together in a single day or a single month or a single week or a single year. So that is how the stock market is. So the short term view is something which we have to take as per our analysis, and if our view is correct, we make some money and come out of the market. If the view is wrong, hit a stop loss, come out. So now, if you look at yesterday, for example, I had a view of the market to be consolidation, so I have not made any profits in the market yesterday because the market went against my view. But if you look at people who had a view that the market were bullish, those people would have made it a day. They would have made a good profit out of it. But then all those people who are talking out there, or who had a view of bullish market yesterday, how many of them had the guts to put their money into the market and make money out of this bullishness? That is the most valid point in stock market, because when, as long as the money is not invested in the market, anybody can sit outside the market and talk, but then talking with the money inside the market is what makes sense. So if you have a view and if you can make money out of your view, then yes, you are on the right track. So similarly, like I told you, I may not be correct every time, but then out of 100 times, if I'm just correct even 60 times, I'm okay with my profits. So that is how we take some decent trades, very decent, very safe trades in MPI Invest. But if you look at our long-term investing, I'm actually happy the way our portfolio is sitting. So at this point of time, I was just kind of looking at my portfolio, right? Stocks, like I think more than 70 to 80% of our stocks are sitting with more than 30 to 40% profit. So isn't that amazing? So in fact, there are some heroes like Persistent Systems, Zensa Tech, Motherson, we also Samadha Motherson, Titan, Tata Motors. It's like more than 100% returns, and So such stocks is that we have, and we're really happy about investing into them at the right time. L&T hitting an all-time high, Titan hitting an all-time high yesterday, Tata Consumer, which we've been holding for a long time with a lot of patience, and finally has hit an all-time high yesterday. So the simplest thing that you can do is decide on a fundamentally strong company and stay invested. You don't know anything about stock market, you don't have to worry. If you know something about the company, if you're confident about the company, then just invest into the company. I am sure that will make good profit for you. But then the most important thing in stock market to make money is your risk management. How you manage your risk. Now, doesn't mean that if I know a stock very good, a company very good, I just go put my entire money into it. Diversify it into multiple companies such that again the market, again if one company collapses or goes against your view, then others can actually take your profit up. So these are things that has to be done in the market to make money, nothing else. In fact, the most important being the risk management. So take care of your risk management. I am sure you can make money in the market. And that's also something very important to understand. In fact, one of the very reasons why I am not very comfortable with mutual fund now is simple. I mean, not that they are bad. If you're a layman, if you're new to the market, nothing better than mutual fund. But in mutual fund, what happens is the diversification is so much that they buy about 60 to 70 stocks in one portfolio. And having 60 to 70 stocks in a portfolio, even one or two stocks becomes a hero. The effect on the entire portfolio seen is very less. An ideal portfolio can be, sorry, not more than 15 to 20 stocks. And if you're having a beautiful portfolio, 15 to 20 stocks with proper diversification of sectors and good companies, I am sure you'll make a beautiful gem of a return in the stock market. If you're finding it difficult to shortlist these companies, track these companies, the best way is invest into something called as the IAP, Intelligent Advisory Portfolios. That is, these are specially curated portfolios made by SEBI registered analyst, and this is tracked on a daily basis. They handle the portfolio, buying and selling on time, and the returns are amazing. In fact, a few portfolios which I am invested in, of course, have given about 30% plus returns in last 1 year. So this is how the markets behave. So I'm just telling this as a very important understanding that all of us should have. And of course, if you want to invest in such portfolios by government approved SEBI registered analysts, then just connect with us. We can help you with the right portfolio as well. Well, keeping that aside, let's talk about the market. So Indian market, of course, rallied up, and in fact, yesterday it was the first close, a strong close about 20,000. So on Monday, it did hit 20,000, but it on a closing basis, it was just slightly lower. But again, like I told you yesterday, now 20,000 is just a number. But then, of course, yesterday for the first time, the market has actually closed about 20,000. In fact, the way the markets have actually taken the fall and taken a good support on this fall, looks like the markets are not in a very weak situation. So that is actually a positive thing. In fact, all these days, last 10 days, I think the US market and the European market have been continuously falling down. In spite of this, Indian markets have only gone up. The most important thing to note, FIs have been continuously selling in the last 10 days, and then also Indian market has gone up. Even yesterday, the FIs have sold for almost 1,400 crores, whereas the DIs have bought only for about 800 crores, and still the market have actually gone up yesterday and hit a record high. So isn't that amazing? So that is nothing but the lot of Indian fund which is coming into the market, majorly in the form of retail participation from the knowledgeable crowd. Now imagine, with just the number of people invested in stock market going up from 2% a few years back to about 8 to 10% today, if the market has gone up so much, imagine a participation of at least another 40% more. Because if you look at developed countries like Europe and US, there's a participation of at least more than 50% of the population, whereas India stands at less than 10%. So imagine, as members get knowledgeable across India and as they bring in more money, the markets are still supposed to, soar further. So that is the kind of market that we're expecting in the future. So important thing is staying invested. So every time the market goes up, there are somebody coming to me and asking, hey, the markets have gone up so much, how do I invest? I say the same dialogue was told to me even 5 years back, 10 years back, 15 years back. Markets have gone up, how do I invest? But all those who kept saying that still are saying that, whereas all those who took an action and invested on at least a SIP mode have made amazing money out of the market. So that is the situation at this point of time. Got it. So these are few things. Of course, the markets have actually gone up really well yesterday again, and has closed strongly. But then yesterday was a bank nifty expiry. But still, the major power is actually coming in from banking sector. The banking sector, which had actually fallen big after the CRR ratio was increased by RBI, is now probably rejoicing that the CRR ratio would be phased out completely by 7th of October. So already looks like the market is actually pricing in that in advance even before 7th of October. So that is the situation at this point of time. So banking sector is looking very strong. IT sector is looking really value for money, and other sectors, if you see, automobile is also kind of decent. But basically, I think the only sector which actually looks too overvalued is the mid cap and the small cap segment, which is kind of overall looks little up, which is kind of moved up too much. So that is probably where you can book some profits. These partial profits can be booked, and whereas good value wherever we see, like good IT companies like Infosys and TCS, these are all companies which I think which we are already invested in. Well, again, it's not a recommendation, but of course, our channel we don't recommend, right? So it's not recommendation. I'm just sharing information what I do. Well, so this is what I'm seeing at this point of time. I've got a heavy investment in HDFC Bank, and that I'm really happy with the way HDFC Bank has been rallying up. Yesterday we had also the PSU banks join the rally, and SBI also has been doing really well. So overall, banking sector is looking amazing at this point of time. In fact, I'm expecting the banking and realty sector to actually go further up in the upcoming years as India starts developing further. So that is an expectation about the market at this point of time. So coming to the market today. Now today is of course the expiry. Now with markets actually rallying up so much, will there be some profit booking kicking in today? But the way the markets have actually taken support, it looks like it may not fall much further. It might have volatility, but not a big fall is what I'm expecting at this point of time. It could be some consolidation again, and markets could actually take up, get ready probably to the next set of rally. Or of course, if it breaks down on the downside, I would be happy about it because some correction is required after this rally for more than 2 weeks. So that is the expectation for now. Now being expiry day, of course, we can't predict the market. The markets can go anywhere. And only thing that I am actually looking at is now after continuous selling of more than 10 days in the US and European market, way the US markets have kind of taken some support yesterday. If it starts rallying, so Indian markets were already rallying. When the global markets start to rally, Indian markets may join the bandwagon, and if that happens, Indian markets can see probably 20,300, 400, or even 500 also. But then one very important thing is, if it rallies like that with the global markets, the chances of falling big is also there. So it is not a good risk to reward point at this point of time, I would say. So definitely not worth taking a risk. I would say you can actually, if you wanting to start investing, start with the SIP mode of investing, and that would actually take help. So yesterday, why US markets were volatile was nothing but we were talking about the US inflation data to come, and of course the data has come actually slightly higher than last month, which is not a great thing. But the major reason for the inflation going up was the petroleum prices going up, the crude oil prices going up. So that can be attributed to that, and because of which probably market kind of feels that the worst is kind of over, and US markets have started moving up again. So with all this, looks like markets in fact if you look at Nasdaq has actually closed positive yesterday. It is just the Dow which has continued to close in negative, but a very short negative. I would say from the fall it has actually risen and recovered a lot. So looks like US markets are getting ready for yet another rally. And if that actually happens in the US, and then Europe might follow. Europe has an interest rate decision today evening. So if that comes out positive, then probably we could see the European markets also rallying. And if the global markets start rallying, then Indian markets probably can follow further. And if at all FII comes back, no questions asked, markets can just go for another rally. But does it mean the markets are very bullish? Of course they are bullish, but of course it just needs a day for all the bullishness of all these days to break into a bearish day. So that's how the markets are. You just have to stay invested to make money. No point in just pulling out and trying to time the market that can be never done by anybody in the world. Well, I think it was slightly longer today, but I thought these were very important information to share. So, of course, let us look forward to a good expiry, and of course, over a long term, definitely Indian markets are going to be bullish, and definitely expecting the markets to be doing well in the longer term. So that's it for now. Stay invested. Let's make money together. Let's grow financially. This is Srikanth Rajan signing off. But before we leave, do press the like button if you love the content that we share. And do share the podcast with your friends and relatives to help them learn and invest fundamentally to grow and make money in this market. Goodbye. Have a great day.